Back to the liens, some of the risks again are you need to do an evaluation, because if you put money into a tax lien, you have to be accepting of the fact that your money could be tied up for 2 to 3 years on this tax lien. Because if they don't redeem, then you're going to have to go and foreclose and get that home run, which is awesome at the end of the day. So keep an eye out for properties that could be landlocked, environmental things. IRS liens generally can be a red flag as well. However, it depends, because a lot of the times if you foreclose and get the property, you can send the IRS a message, and a lot of the times they'll remove the lien from the property and just keep it attached to the person. But if you're new and you're starting out, or if there's a lot of money involved, I would avoid properties with IRS liens. Okay. Now, this applies to both tax liens and tax deeds as well. A big thing is make sure that the addresses line up. Sometimes the counties make mistakes and the address is wrong. So we've seen this several times, and it definitely happens. And what happens is, if the address is wrong and you buy that property, it's just a pain in the butt. It's a nightmare, and your money is tied up. Okay. For those of you guys tuning in, I'm Dustin Hahn. We specialize in real estate, tax liens, and deeds. Go ahead, subscribe if you like this information. Give us a thumbs up. Helps the channel out. Ask a question in the comments. I'd be happy to answer those or make a video. I give away the best-selling book, Tax Lien, ABCs of Tax Liens. It's in the description. We don't sell it. We just give it away to provide lots of value to folks who want to make some money with tax lien investing. All right. So tax deeds can definitely be more, well, not definitely, they are riskier. Okay. So, and that's the thing, bigger risk, bigger reward. So some of the risks of tax deed investing that you need to keep in mind are the following. A, you generally can't see inside that property before you buy it. Okay. B, you have to pay in cash. You have to pay full in cash. C, you have to do all of your own title research yourself to make sure that the county has filed the notices to the chain of people who have liens properly. Because say you go and you buy a $30,000 tax deed on a $200,000 property or something like that, and then you find out that the property, basically the chain of title, hasn't been notified correctly, and that's going to be a huge pain in the butt. So you can either tackle it yourself or hire an attorney to do it. So with tax deeds, you're definitely going to be open to some higher risk. Okay. But, higher risk, higher reward. And your job is to minimize that risk. And my job is to help you minimize that risk as well, so that you don't lose your butt on these deals.